Hey traders, Jason here from Leavitt Brothers. Happy Sunday. I hope you're well. I say that all the time, but it's mostly cliche. This time I actually mean it. I hope you're doing okay out there. There are many things we can talk about, but I don't want to cram too much into one video, so I'm going to try and stick to the script here. Let's do a quick rundown of previous bear markets to gauge where the current bear fits. Okay, I'm not trying to match up the current market with the past and guess, what the market might do next. I just want to put things in perspective and get a sense for how normal or extreme the current market is. All right, so I'm going to start with 1987, the crash there, and then I'm just going to move forward through each bear market we had. All right, so here is 1987. This drop here was 35%. It's a big 35%. Obviously, we had double bottom that was separated by about 6 weeks. And then the total time from top here until the top formed way over here was about 2 years. Okay, so 35% drop, double bottom, and 2 years peak to peak separated the highs. Moving forward, here is 1990. What we have here is we have a 20% drop. Okay, kind of a rounded bottom here. Obviously, one more touch here, and then back up. And the amount of time peak to peak was about 7 months. Okay, so only a 20% drop and then 7 months peak to peak. Okay, smaller drop, smaller time to recover. Moving forward, here is 1998. Okay, so you have, let's see here. So 1998, we have a 21% drop. We have double bottom separated by about 5 weeks, and the amount of time peak to the next time the peak was taken out was about 4 to 5 months. Okay, not bad. Only a 21% drop, and then only 4 to 5 months to recapture all the loss. All right, moving forward, here's the dot-com bubble time. So obviously a much bigger drop. The total drop was like 50%. Big drop. Obviously, it lasted a couple years. I guess I'll call this a triple bottom. I mean, this kind of looks like a double bottom. We had a bottom here and a bottom here, but it failed, and we got another bottom here. So in total, we have like a triple bottom separated by about 8 months, and then the amount of time to get back. So if we go peak over here to peak over here is about 7 years from peak to peak. Okay, so 50% drop, triple bottom, 7 total years to get back up to the high. Here's the financial crisis, 2007, 8, and 9. So once again, this drop here was like 57%. So we kind of have a bottom, mini double bottom here, but it failed. You got another low here, and then obviously another low here. Okay, so this low here separated by about 4 months, and then peak to peak. So we measure the 2007 peak all the way up to when that peak was taken out was about 5.5 years. Okay, so 57% drop and then 5.5 years to completely recover. All right, moving forward to 2011, much milder. This is a 20% drop, double bottom, separated by about 2 months. 2 months later, we get another dip down. And then total peak to peak, from here to there is about 10 months. Okay, so 20% drop, 10 months to recover. All right, moving forward, 2000. We're going to go to. I shouldn't include 2015 and 2016 because we didn't get bear markets, but I'm just going to put them in anyway. So in 2015, this is only like a 12% drop. Double bottom, recovered. It didn't completely recover here. So let's just call it a 12% drop, double bottom, and then recovery. 2016, we have a 15% drop, double bottom, and then recovery. The total time, like from way back in 2015, which would be like, back there somewhere, all the way to over here was about 12 months. Okay, so it's like in 2015 we had a 12% drop, double bottom. 2016 We had a 15% drop, double bottom, and the total time to recover was about 12 months. So mild pullbacks, 12 months to totally recover. Now let's go to 2018. This drop here is like almost exactly 20%. Okay, this is the only V bottom there is. Every single other bottom was double bottom, triple bottom, rounded bottom, bottoms that take, at least a month, oftentimes 4 or 5, 6 months to form. Okay, a typical double bottom is going to be like 5, 6 weeks. The bigger ones take a little bit longer. This is the only V bottom that there is. Okay, 20% drop, V bottom, and the amount of time that it goes, peak to fully recover is about 8 months. Okay, and I'm going to summarize all this in a second. And then here's the current market. Okay, just in the current market right now, this drop here, well, it's not showing up. So this drop here is 27%. Okay, so let me put it all in one place so we can see how this lays out. All right, so a couple things that stand out here. Okay, notice 20% drop, 7 months to recover. 21% drop, 4 to 5 months to recover. 20% drop, 10 months to recover. We had these double bottoms in 2015, 2016, 12 months to recover. 20% drop, 8 months to recover. Okay, so notice the definition of a bear market is 20%. Notice how many of them were like right at 20%. I mean, like 4 of these were exactly 20, 21%, and then one of them didn't even hit that high. Okay, then you get 35% drop, but it took 2 years. We get dot-com bubble and financial crisis where 50% drop, 57% drop, and these took like several years. And now we have 27% drop. So we're already beyond this, get a 20% drop, it only takes a few months to recover. Other 20% drops, a few months to recover. We're already beyond that 20% threshold. Okay? Futures are already limit down right now. So this is already going to be over 30%. So we're already crossing that threshold where this number over here is likely to be a couple of years, not 6 or 8 months. So that kind of puts things in perspective. It's not a prediction. I'm not necessarily using the past and trying to overlay the current chart onto a past chart and saying like this is the most, this is where the highest correlation is. I'm just saying like we've crossed a threshold where we've had a big enough pullback that this is no longer just a garden variety bear market 20% pullback where it's going to take 8 or 9 or 10 months to recover. We've crossed that threshold, and it's likely that it could take 2 years, and who knows? We could have a much bigger drop, and it could be 3 or 4 years. We just don't know. But my point is, we've gone past that 20% mark. We've gone well past it. We're going to keep going past it. So the number that shows up here is likely to be measured in years, not months. All right. Thanks for listening. You can follow my YouTube channel right here by clicking the red subscribe button, and I'll see you next time.